Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only.
Morning, everyone. Just a quick update on markets and volatility out there. So we're in a little bit of a touchy situation in markets here. We can see that this long uptrend line is being threatened repeatedly over the last few days. We dipped below, we got back up, we smashed our head on that 50-day to the upside, which I've been talking about a little bit. We've got the 9-day moving down as well, so that becomes even more resistance as the 9-day, the 50-day converge, and we're well off this kind of zone up here. So we're just really struggling. As I mentioned early in the week, I said this chart has got a lot of work to do, right? So we can see this uptrend line that was broken here. We dip below again. So the market is really struggling to stay around that 59.75 level. We're going to talk about that in a moment. Here's another closer up view on the daily. So we breached again to the downside. We had the NVIDIA come out, good numbers, but it's not holding, right? We bounced up into that 135 area on NVIDIA. Let's take a look at it here. Bounced up into there. It looked like it might start heading towards 140 and to that downtrend line, and then maybe start to kind of set itself up for a little bit of a move higher as we've put to rest some of the concerns that people aren't spending money. Blackwell looks really good, lots of sales. The news is overall quite good, but the problem is this market is just struggling from a technical standpoint and with a lot of fundamental things that I've been talking about all week. Very concerning things that have some durability to them, right? So I'm bullish overall. The problem is over the next 5 or 6 months, we may have some headwinds that we have to deal with. The tariffs, probably what we're going to get is a bit of slowing growth. We've got very sticky inflation coming from many different areas. And that's a concern. So NVIDIA reversing that little pop in the morning, coming back down towards the 200-day. So this is a battleground here for NVIDIA, and the overall market is definitely taking note of that.
Hey everyone, if you trade options, you need to understand volatility. It's as simple as that. Check out my Pro Volatility Ninja series to understand the ins and outs from a pro who's traded volatility arbitrage and options income strategies for almost 3 decades. $47 for this is a steal, so check it out in the link below and enjoy the rest of the video.
Right here, we can see the S&P below that line I mentioned. It's just going to struggle in here, up against this resistance zone. And to the bottom in here. So if we get below 59.20 with any velocity below 5,900, I think we really do have a problem, and we're probably going to revisit those lows of about 5,800 to 5,780 before long. And I'll tell you why that could happen here. Q's very weak. Now, I know there's been a broadening out in the economy, and I've been calling that for about 7 months. Start looking around. Don't just play the same old things, the AMDs, the NVIDIAs, the Microsofts. They've been doing nothing for 7 months. So look around. It's a big, beautiful world out there with lots of possibilities, especially if we get lower rates into the end of the year. Maybe it's not for the best reasons if we get a slowdown, but low rates are definitely going to help, and I think the market will view that as positive at some point. But right now, it is off of MAG, off of tech. A lot of work to do on this chart. Can it get back through there? Of course, anything can happen. Let's take a look at the VIX here. We've got a VIX that's popped above this level here. It's retested some of these moving averages, and it's kind of just sort of sitting around in here. So I think that, we're far from the coast being clear. And from a gamma perspective, we see these short puts around that 59.75 level. This is right where we're having a bit of a battleground in markets today. So we've got a whole bunch of people who've come in, bought a lot of protection last Friday, huge trades to the downside. When you buy puts and the dealers take the other side of that trade, what happens? Well, they end up being short gamma, and a short gamma profile is one that is very concerning. So let me show you just quickly how that works. So if a dealer sells 100 out of the money puts, let's say those are a 30 delta at a VIX of 15. Well, as the market moves down towards those puts, the natural move from delta is and from movement is, and from gamma, of course, is that these are going to become a 35 delta. That's just from sheer movement, 35 to 40 delta. The problem is the dealer has to sell stock against those. So they're short, let's say they're short 30 deltas, they have to sell 3,000 shares of the SPY, let's say. When it goes down to a 40 delta, they have to sell another 1,000 shares for 4,000 total. Right? So they're selling into weakness, right? That's not a position of power. When the market is coming down and you have these effects of dealers having to sell, and then you've got all this synthetic short gamma from leveraged ETFs and inverse ETFs, all this stuff out there that really adds to this problem on the way down that can have this snowball effect. Well, this is a very simple example. They have to just keep selling stock on the way down. Well, what happens if the VIX goes from 15 to 18? Well, that's called Vanna effect. Right? So what that means is that instead of this 40 delta, maybe those become a 45 delta, let's just say. Probably, maybe not that much, but let's say they move to a 45 delta. So under a normal implied volatility backdrop, these would become a 40 delta. But because these are still out of the money, these are going to jump in deltas a little bit more. And the Vanna is that effect of implied vol going going up, that delta rises even more. So what does that mean? Well, instead of the dealer having to sell 4,000 total, he or she has to sell 4,500 total. So do you see that? How the increase in implied volatility, which leads to an increase in that delta, means that the dealer has to actually sell extra because of a jump in implied volatility. So that's your Vanna effect to the downside. So when dealers are forced to do trades where they're selling lots of that downside, which is a typical trade, right? Generally clients are selling upside calls, which replenishes dealers with gamma. They end up buying lots of calls that gives them positive gamma to the upside. So, above 6,000, 6050, we have a lot of positive gamma up there. Now we're sort of getting to a point where we're kind of sliding down the curve a little bit, which is pushing up VIX, but we're also getting maybe a little bit of a bump up in VIX. But I have to say the VIX is actually quite well behaved at this point. But as we sort of move down towards these levels, these 5,900 levels and into the 5,800s, we now have a problem because dealers have a lot of short gamma down there. And that means you're going to get two things. You're going to get dealers already having to sell the market because of increasing deltas. So they're getting long deltas. But in addition, they've got this Vanna effect of implied volatility going up. So this is very much a downside problem that you typically have. The Vanna works the other way to the upside, but it can kind of push things as well. So as implied volatility drops to the upside, those out of the money call deltas drop, and so any hedging against those, you actually have to buy futures into that. So it can kind of push things to the upside. It can push things to the downside, and that's sort of the reality of this market. Now, it doesn't mean that this is going to happen. We need the spark. So you can think of these situations as kind of dry kindling, just sitting there, but it requires a spark, right? And sometimes enough technical damage is enough to kind of create that spark because markets are going to be more volatile, and then it'll trigger. There's sort of vol triggers, and things start to snowball out of control. So we don't necessarily need some sort of news, but the backdrop, as I mentioned, is quite negative at the moment, and that can be enough to cause volatility that is effectively the spark that starts to get that snowball rolling down the hill. So we've got some issues out there. I'm not saying that it'll happen. I'm actually starting to pick away at some positions, picking up some of my favorite names, creating some upside structures for now. But I think this is a market where we're going to struggle to get too far past 6,000. I think if we get past 6, we can get to 6050. That's going to be a real battleground right there. And then above 6050, I think things start to look really a lot better again. But given the backdrop and given the durability of the problems that I'm seeing out there, at least from a short-term perspective, remember, the tariffs are the front-loaded part of the administration's plan, right? We're going to get those tax cuts, but later on. In the meantime, as I've been saying, Trump just kind of doesn't mind breaking some things, and potentially that Trump put isn't there anymore. This idea that he loves markets, he loves stock markets, he wants everybody to get rich. At the moment, he's kind of putting that stuff aside a little bit. So the honeymoon is over, and I think markets are having to grapple with that. We're starting to see the MOVE index, meaning rate volatility, pick up again. So this is starting to be a very new picture compared to the one that we had right after Trump, which was, hey, everything's going to be phenomenal, and the markets reflected that. We are now in a very different backdrop. So careful out there. Be careful. Pick your spots. Look for those names that you really, really love. That's what I'm doing. I'm enjoying the higher levels of implied volatility. I like that higher option pricing. It allows me to do some interesting things, and I'm picking away at names that have come down 20 to 30% from recent highs. They may still be a little bit on the high side, but I'm really starting to look for those names that have the really, really wide moats. I'm not going to mention them here. I'll put those in another video, but think of companies that have really wide, unassailable moats that can't be disrupted that easily. Now, of course, anything can happen out there. This is a very, very rapidly changing world thanks to technology, but you really have to think of that. Something like a Netflix, I'll just say, right? That's probably not going to get disrupted. That is going to be something that's going to do well in a good market, in a bad economy, good economy. These are things that are interesting to me. Is it cheap? No, but I like everything about it. Yes, it can still drop. So those are things where I'm kind of taking a good look, and I've got on my watch list to be able to react. Set those alerts, right? Look for those spots on the chart that you're interested in to get involved in something. Set that alert and take a look at it. When that alert goes off, take a good look at it. Come up with a plan, and then take a really good look at it when it gets there. Try to stick to the plan when the time comes. Okay, we'll see you in the next video.